Higher GST and more taxes. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because this is going to be an interesting one. There's going to be calls for higher and more widespread GST and just more taxes. Isn't that what we need? Now, I wonder why. Organizations are calling for this. Now, this is coming from, and I'll bring it up here, this is from the Tax Institute of Australia. It's a professional body, and I'd say a lobby group. It's the leading forum for tax community here in Australia. But I would just, as we're looking at this article, remember they're an association of tax professionals. So while they're advocating for a simplification of our tax system, well, how do you think they make their money and their living? I'm sure it's just a coincidence. Just at all. I'm being too paranoid, guys. And maybe why would we have such a significant, demand for taxation? Maybe it's this huge amount of government debt that we're seeing here. We're looking at $1.3 trillion coming, everyone, for us. 1.3 trillion from state and federal. Just a smidge under. But what's a couple of $100 million between friends? Nothing. Not here in Australia, guys. Just pile more taxes from us. Oh, boy. So let's have a look at this, guys. Let's jump in and, start out by looking at, how highly taxed a nation we are. Now, in the past, I've made reference to the fact that we're one of the highest taxed nations in the world. And if you're sure you've got your income tax, then you've got all these other taxes. Most of them people don't even realize we're so used to. You go out and get a beer, you're paying tax. You go out and driving somewhere. You go to drive somewhere to pay your taxes, you're paying taxes on the petrol that you're using to drive to pay your taxes. Welcome to Australia. But there's one article, a research paper done by the OECD, and let me just bring that up here, just showing you how significant our taxes are. Now, this is for the entire country. You can see here Australia is number 4th on this list. And this is income tax by household type. And it's showing the difference between a single with no child and married one-earner couple with 2 children. And you can see Australia, there's no real difference. In all of these other countries, there's a benefit to being married with a couple with 2 children. But the thing is, you don't get a tax write-off here. You receive the family tax benefit, which is, frankly, it's welfare. Because once you earn a certain amount of money, it all disappears, and it goes pretty quick. So if you're wondering how these people can afford to live with so many children or and not working, not having a job, that's how, guys. It's crazy, So that's a consideration as well. It's something to think about while it's looking, the same. But you can see where, Denmark is right up there over 35, and it drops down for when you're married with one earner and a couple of 2 children. Then you've got Iceland, and then Belgium, slightly above us, and then there's Australia over 25%. So, there you go. And it just goes further and further down. So we're the 4th highest tax nation with regards to income tax by household type. When you add all the other taxes on there, we're pretty taxed, guys. We are pretty taxed here in Australia. It is a significant amount of money that's ripped out of our hands and put into others' pockets. And, the problem that this creates is people look to minimize their tax. Any sensible person looks to minimize their tax. So anyone who says they're happy to pay their taxes, I don't believe a word of it. If people were happy to pay their taxes, why do we have so many people doing everything they can to negative gear their property to reduce their taxation? It doesn't make sense. Who donates money to the ATO, extra money? You can go and pay extra taxes if you want. Who does that? No one does. Come on. Sure, people are appreciative of some of the services they get, but guaranteed there's a lot of waste, and there's a lot of ways you can spend the money better than the government can. So let's have a look at this article, everyone, that's looking for higher GST and more taxes. And I'll just bring up, as we're going through, this note about the Tax Institute, because they're the body that are advocate or calling for this. So, Tax Institute releases a 287-page reform wish list to fix the broken taxation system. And they've done this before. They did it in 2011. And what has happened with that? Here's the thing. If you look back at some of these taxes that were introduced, They never get rid of them. They never get rid of them. Payroll tax. I don't understand punishing businesses that are employing people. That does not make any sense to me. Yet they do it. They do it. Wasn't that? I think it was for World War II or something. I think the war's over now. I kind of think it's over. But here we go. How long are we going to be burdened with taxation and extra costs and expenses because of the debt that we've racked up for the job keeper, for the future mortgage keeper, for all of the intervention the government has done to prop up the economy? So, Australia's tax laws are costing the nation about $50 billion in compliance costs, while inefficient taxes are costing even more in lost economic growth, the Tax Institute has warned. Well, yeah, this is it, guys. You've got to burn through a lot of money to comply with the rules. This destroys innovation. Rather than creating a new business to earn more money, you look at at one point it becomes more effective to look at ways to minimize your tax. So rather than investing in starting a new business, rather than investing in this or that, Australia, just negative gear it. Buy a house. She'll be right, mate. That's why our economic complexity, and I'll bring up Harvard here, it's why we're 87th in the world, guys. That's what this taxation leads to. The complexity of the system it leads to. If you've only ever done pay-as-you-go, if you've never had a trust or all these other things to deal with, if you've never had an accountant other than one in the shopping centre, you'd probably be a bit shocked at how complicated the bloody thing is. One of Australia's leading membership groups for taxation experts, the Institute, systematically attacked Australia's more than 10,000 pages of tax laws. 10,000 pages. With a 287-page paper called The Case for Change. Launching the report, the Institute's Director of Tax Policy, Andrew Mills, said previous estimates had put tax law compliance costs at $40 billion. But that was from the Henry Tax Review more than a decade ago. And the cost was likely more than $50 billion now. Let's put that $50 billion in perspective. Let's jump here, and I'll just bring up this. This is the tourism industry in Australia. Well, was $60 billion worth of GDP. $60 billion. Here, we're spending $50 billion on taxes, guys. Okay? So the tax compliance costs is equal to our tourism industry. Just let that sink in for a moment there. Give or take $10 billion between friends. Just shows you how much money we're burning on that type of thing, guys. So, a huge part of the cost is avoidable if we address the systemic issues of our system instead of continuing to tweak around the edges, he said. You can put as many band-aids as you like on a broken limb, but it doesn't change the fact that it's broken. But you need to have the political will for change. The problem is any changes to the tax system are going to be used for political brownie points from one party to the other, even if it's for the betterment of the nation, for the betterment of the economy, and long-term it's going to be a better outcome. Doesn't matter. The politicians will just use it for their own political means. This is where you need a more educated populace so they can't fall for all that stuff. Maybe I'm just being much too naive there. A prime target for reform, according to the paper, is Australia's increasingly complex superannuation system. The report argued that it is almost impossible for non-experts to navigate the labyrinth of caps and other rules. Well, yeah, that's it. Isn't that the intention, to create a system so complex that you need to go to a union or a bank-controlled super fund, or you need to go to a third party to manage it for you? Yet, despite these efforts to rein in the largest excesses of tax breaks going to higher income earners, Mr. Mills said most tax experts and practitioners consulted as part of the report agreed that the current design of the taxation of superannuation is far too generous. The fact that the taxation is levied at concessional rates on contributions and income of the fund during the accumulation phase for members, yet fund income and benefits during the retirement phase are exempt, means that concessions are significant and their affordability in the context of the whole system is questionable. Well, here's the thing. If it's not affordable, you want to give these concessions, rather than being critical of the taxation system, maybe we need to reduce the necessity for all of this taxation of our government. Maybe we just consider how much debt our government is racking up and question, if we need to spend that much money? Where could we save money? Where could we reduce money? Where could we find some savings? Maybe we look at reducing the size of government. That's a novel concept. The report suggests a total overhaul of superannuation taxation, so the contributions and earnings of those are tax-free, while the withdrawals made in retirement would be taxable. There you go. So what this is going to do, you realize this is only going to affect future generations. You've got civil servants that already get a benefit with regards to wages compared to normal workers. You can see this here in the difference between the private sector and the public versus private, or the public sector year-on-year wage growth. Some of them have super where they only had to contribute a particular amount, fixed amount, and they just can take out, they've got a guaranteed return, no matter what, a guaranteed payment for the rest of their life. It's insane. They're not even tied to the market. It doesn't matter if things go up or down. It's just a complete and utter fantasy. This is what previous generations got, everyone. This is what previous civil servants received. Such stupid stuff like that. And now, look at how it's going now. Just ludicrous. And they're the ones that say, oh, you got to, work bloody hard. No wonder young people are getting the shits with it all. A modest inheritance tax considered. Oh, here we go. I got to add that one to the title. Oh, boy. It also highlighted the role that superannuation, as well as property holdings, are likely to play in transferring wealth inequalities across generations. It's because we're all taxed to the bloody hilt. Okay, how much money do you make that just gets vacuumed away? It's the problem with pay-as-you-go, guys. People don't realize how much money is getting filtered away from them all the time and pissed away on these stupid government initiatives and programs. No wonder you can't get ahead, everyone. No wonder people are struggling to get ahead. They can't even get into a house. All these previous generations that got into houses when they were a lot cheaper, they didn't have superannuation forcing them to save for their retirement before they got home, before they even got a deposit together. It's estimated that over the next 2 decades, Australians over 60 years of age will transfer $3.5 trillion in wealth, the report noted. Notably, 78% of the estimated wealth transfer will go to roughly 20% of recipients. While noting that Australia is relatively rare among developed countries in no longer having any form of inheritance tax, it does not advocate strongly for introducing one, noting that they generally raise relatively little revenue. If consideration was given to a wealth transfer tax in Australia, it is our opinion that any rate set should be relatively low as compared to others. For example, 5% above a certain threshold of, say, 2.5 million or another reasonable amount. So you're going to get your Sydney house, in a few years' time, average Sydney house is what, $2-3 million bucks. Then you're going to have to sell it to get they always want a slice of it, don't they? They bastards want a slice of your pie. And then who are they giving it to? Tax experts support negative gearing and capital gains tax reforms. Despite Labor's defeat at the May 2019 election, when it campaigned on changes to limit negative gearing and capital gains tax discounts, the Tax Institute's report found some similar sort of reform should remain on the agenda, if it's politically possible. I would say the only reason to look at negative gearing, you have to phase it out for everyone over time. Don't let that previous generation still hold on to it. That's the thing. That's what Albo or Shorten was putting forward. Him and his mates, they would already get it, but no one else can take advantage of it moving forward. The operation of the negative gearing regime in conjunction with capital gains tax rules creates the perception of potential tax advantage and encourages investment behavior based on capital gains tax discounts gains upon sale or disposal, the report noted. The conclusion concurs with many housing experts who argue the current policies have encouraged speculative investment and pushed up real estate prices. The Institute recommends limiting both tax breaks. There is a strong case for principle-based reform such that losses on investments should not be deducted from salary and wage income, it argued around negative gearing. The introduction of rules to quarantine losses so they are unable to be written off against salary and wages income would reduce the tax-driven incentives towards such investments. The report also observed that the capital gains tax discount of 50% for assets sold after being held for more than a year has become far more generous in the lower inflation world since the tax was introduced. In simple mathematical terms, that would suggest that the discount should be around 11%. Clearly, such a discount rate would be politically unpalatable, but the point of the comparison is that the current rate no longer reflects the policy it was originally designed to replace. Moreover, it is inconsistent with the tax treatment of other unearned income, such as rents and interest. Lower income taxes, cheaper childcare, but a higher GST. One of the main observations of the Tax Institute report is that Australia raises too much revenue from income taxes, both personal and corporate, which are a drag on productive economic activity. More than 2/3 of Australia's tax receipts come through personal and corporate income tax, which is approximately twice the OECD average, the report noted, although many other developed countries have additional social security levies on individuals or businesses. Most other advanced economies have placed a considerable higher reliance on the taxation of consumption or value-added taxes. Not that this means Australians are overtaxed compared to similar nations, the report observed. Australia has relatively low tax revenue as a percentage of GDP compared to other OECD countries. In 2018, doesn't feel like it, does it? In 2018, Australia had a tax revenue as a percentage of GDP of 26.7%, while the OECD average was 33.9%, and common comparative countries such as New Zealand and the UK were both 32.9%, and Canada was 33.2%. Rather than reducing Australia's tax take further, the Institute argues that an increase in the GST could be one way to cut the corporate tax rate to a maximum level of 25%. It is currently 30% for big business and 25% for small and medium ones, and further lower income taxes. Without increasing the GST rate from 10%, broadening the base to include some of the main items currently exempt from GST could increase revenue by $21 billion, the report noted. What about reducing the scale of government? Is that even considered anymore? Probably not. No, we can't have that. Well, that's against the interest for the Tax Institute. They want to keep government. Alternatively, an increase of only 2.5%, equaling a GST rate of 12.5%, applied to the existing base would increase revenue by $14 billion. If the base is broadened to include some of the many items currently exempt from GST, and those items are taxed at a lower rate of 5%, with the existing base being taxed at 12.5%, the revenue potential is $25 billion. Yeah, this isn't anything revolutionary, but come on, guys. Do we just want to keep putting taxes up? If they put them up, they're never going to go down. Seriously. Although the Institute added, there will need to be appropriate compensation through the transfer system and a reduction in income tax rates to compensate low and middle income earners. One group of income earners that the report strongly argues is in need of a tax break is working parents who are the primary carer for their children, overwhelmingly women. Primary carers can face a net cost of working an additional day once effective marginal tax rates are added to the cost of childcare itself, it observed. This should be regarded as one of the most fundamental failures of our system. Suggested options for reform include either expansion of the childcare subsidy or providing universal free childcare, or allowing for income splitting taxation based on the family unit, not on the individual. Wouldn't that be a novel concept? How about we bring some of that back, guys? So, what is the solution to this, everyone? Frankly, I think it's very simple. We need to advocate for a reduction in the scale of government spending, reduction in the scale of government, and then a simplification and a reduction in our taxation system. We need to move back to taxation paid on the family unit. So, you have a couple coming together, raising a family, it's divided by that. Right now, we've got this family tax benefit that's essentially just welfare for lower income, that it disappears once you hit a certain income threshold. So, there you go, guys. What do you think? Let me know your thoughts and opinions on this. Are you happy to pay your taxations? If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time. Bye for now.